Okay, I like what I'm doing here today. Price was above previous day's high, so I was bullish. I just got stepped out of one of my ideas. I got two ideas going right now, and I like that strategy because I got a quicker stop loss strategy. Quick, if it doesn't work, get out quick. I got another strategy where I'm going to let it move a lot, and I'm going to have my stop loss bigger and further out, and let it wiggle. So if I get stopped out on both of these ideas, I will, for the first time, really consider just stopping and reassessing and waiting. Because I like to be in a trade at all times. I think a lot of traders do, but that's not always good. So one of my Apex accounts, top right, is a more of a further out. It's a $500 risk. Like I will take a $500 risk on a trade. And the one in the bottom right at today is a discretionary trade where it's like a $50 risk. Okay. I'm not going to lose more than $50 on a trade on that particular. So right now, the top one, I've got a $250 limit today on it. And my idea is that if it was bullish after the news, that it would stay and continue to go up. But now it's coming down. So here's my stop loss. I'm not going to wait all the way down here. $250 limit is all I really, and this is $172. Let me check and see what it would be like if I did just stretch that down all the way to the pivot level. Now we're talking about $266 limit. And maybe that's a better place to put it. It's close to 250. I don't like moving my stop. This is not a good thing you ever want to do. So, and I'm just going to leave it there. It takes me out, it takes me out. Because I really need to get good at accepting defeat, taking my losses, and then pausing. That's where I really want to make this video for today. That's the key point of this video today, is that if I'm wrong, then I need to really stop and reassess what I'm going to do for the day in general. If my bias fails and it doesn't work, daily bias up here, it was green. CPI news came out. It was strong. It was holding. So of course I want to be bullish, right? And then it started consolidating at the open right over here. And it was they opened, yeah, as soon as the bell rang, then it looked like it wanted to go back up over the top. I had my stop here for the first trade, here for the second trade. And if it continues to go down and get me out, I'm done for a while anyway. Okay, it got me on both of them. So that feeling, like, oh, that makes me mad, I'm disappointed, there's frustration, all that stuff kicks in, and you want to immediately revenge trade, get back in the trade, especially if it goes in your favor as soon as you get stopped out. That happens to all of us. I am starting to really understand that unless I hit my daily loss limit on everything, I'm going to look for more opportunities, but I need to be very careful of what I'm thinking now. Am I thinking bullish now after it's fallen below previous day and the candle's now red? And we've seen, tomorrow's the FOMC, I believe. This thing can stay in. Here's the thing. This thing can stay choppy just like this all day long. Make a great range trade. Make a lot of money and profits range trading it. Or it could collapse and go down half of this candle. Maybe come all the way down and test this daily trend line that's coming down this way. It could do anything. It could, it come down. It can come all the way down this pivot here and then bounce and go back up. And you don't know what it's going to do, but what I do see it doing right now is it's below previous day's low, and it's a red candle. Okay, so then I got to check my 10,000 tick chart. Where's price in relation to my favorite moving averages? Well, it's turning into a sell signal. And then I like to look at the 15-minute chart and then the hourly chart. 15-minute chart, the price is below the moving averages, but it's a pretty strong bullish move here. Hourly chart, bullish. Price is bouncing above the moving averages, strong. So it could turn into a bearish day, but it's more than likely a pullback at this point. I will be more bearish when price closes and keeps pushing. Well, if these moving averages cross on this 15, you're asking for trouble. They've already crossed on the 10,000. I think they're about to cross. 20 crossed the 50 EMA. Once that happens on the 15, then I'm real careful about going long. I'll be looking for a few more trendline breaks sometimes on the 500 tick chart to see if it is possibly going to reverse and go long with the tight stop loss using my discretionary account. $50 limit again. That'll be the second try. And if I lose 2 in a row, that'll be a $100 loss for the day. Okay, so yeah, this looks like a nice possible turnaround. Let's see, I need a 5,000 tick chart on that though. Trend lines on these two, just making sure that, yeah, it's getting stuck right here on some moving averages in the trend line. See if it can break that and hold, maybe bounce off of it. Then we might have a better setup. Hoping that it pushes through resistance is higher risk. Okay, so now we got a closed candle here. I'm going to use a discretionary account, $50 maximum loss limit on this trade. So anyway, I'll let you guys know how these trades go today. That's just where I'm at in my journal. This is my recording, my feelings, my ideas, and growth and failures all wrapped up in one. So, well, I mean, this is a good example of staying flexible in the direction that you are biased with. I mean, on the 10,000 tick chart, let me see if it's the same. Yeah, it looks like it's the same on the 15-minute. Okay. Price fell below previous day's levels. Key importance. Okay, so this line right here is previous day's high. Try to get over, try to get over, try to get over. And now it's becoming resistance. This area right here is an interesting area to short that. And we see the same thing over here. Previous day's high, couldn't get over it, breaks down. Here's a great short, great red takeout green. And then right here, these formations, this consolidation, and the breakdown right here. Of course, it always, a lot of times comes back up to test that breakdown level. I like to sometimes hit that. Just really good setups to the short side. So why am I trying to go long on it? Now that's the question I need to ask myself, because I'm overly biased to the long side. Okay? That's not good. You know, my big thing and my big rule is where's price in relation to previous day's levels? So if price is having trouble getting up over the top of previous day's high and it's forming a pattern and a weakness, this moment really area I should be thinking short. But if I'm still long biased, why would I be long biased? I guess I got to drill into that a little bit. I really got to discover what kept me in the long side. And if I did recognize that I was wrong, I had a great opportunity to break even right here when price came up to the trend line coming down and right to my break even point, holding 3 micros. I added 2 micros down here because I thought while I was in the long bias that the CPI news report spike will be the support. Got my stop down here for 3 for 500 maximum drawdown, maximum loss on the one trade. And I'm going to stay with this plan. And if it stops me out, it stops me out. But I do recognize that I need to be flexible with my bias. It's hard, though, when you're already in a trade. When did I start this trade? Because if I started it when I should have been shorting, that's also something I need to recognize. Right here is a sale. I stopped out of that one trade I stopped out of. I think. Trade long. Oh, I was going long right here. Stopped out here. Wait a minute. What's going on? Okay. I really don't know why I was still in that trade. Let me see. My stop was supposed to be... Yeah. Now I remember. My stop was supposed to be underneath this, and that's why I got stopped out. But when I got my computer crashed, and when I came back on, I still was holding a micro. That's what happened. And I couldn't understand why it didn't stop me out. Well, it did the sell order to get me out right here. But it didn't close it for some reason. So I added. This looks like it's going to break down unless this chart's more accurate with potential pintails and bullish candles. We'll see. There it goes. Now it's breaking below the CPI report news right here. Okay, that's the CPI. That's the lowest price got at 8:30 Eastern time with the inflation data. Let's see it. It's going wait. Now my stop for this trade is down here. See, this is why I like having more room. And you know, you can't take as many trades. Granted, $500 losses is pretty much done for that account today. And but it gives you more room. It gives you a different mindset. It gives you more freedom. And yes, a bigger loss, but it also teaches me to wait patiently for the trade to play out better than having a quick stop loss, which is a great way to trade too. I like to trade that way. But I have two strategies I'm using. One's a longer term, larger loss, more risk, longer hold time. And the other one is quick, more scalping. Look at this. It's going to get my target. It's going to target. I wish it was a profitable target. It's going to hit my stop loss. Yeah, it's got to now. Look how far down it is. Well, let's pause the video and see what happens. It's close, close. What's it going to do? Well, that'd be super cool if it just bounced right here and went up. I have missed a couple trades like that before by one tick. Whoa, whoa, what happened? Where are we at? Oh. Okay, it got me. So I'll have to reassess everything. That's too many losses for one day. I got to rethink what I'm doing wrong and go back and look at what happened. Why was I in the long side? Think about that more clearly. And just really understand that I'm not dollar cost averaging anymore. Like I would be, you know, buying and buying and buying until the accounts blow. And sometimes that works out great, but more often it's going to blow the account. It's an illusion of success. Dollar cost averaging for futures trading is an illusion of success. And using the stop loss for the account blown limit it's potentially good because you're only going to lose so much, but it's not really helping with good quality risk management and stuff like that. Now, if it bounces right where it gets you out, that's the way it goes sometimes, and you really can't get overly flustered with stuff like that. It's just stay with the plan, find out what you're doing right, find out what you're doing wrong, make adjustments, and keep practicing faithfully by the grace of God. Well, that was a classic blunder, accident, that actually worked a little bit in my favor. Instead of closing out those 3 micros, I added 3, making me long 6. And I think I did the right thing, even though, you know, hindsight, I wish I would have held it. Price had come up enough. I got some of that loss back. And I was really thinking about holding it because it kept going. And I could have made all that money back. But that wasn't part of my plan. And I decided not to risk the full amount since I made some back on accident. I closed it out, and it was a better loss. But I did get into another trade with my discretionary account, and I'm long 1 micro. Stop loss down here, and we'll see if it keeps going. It's got to get past that same trend line that it failed at before. Oh, on the day chart, it actually did one of the possible scenarios I was talking about, coming back down to the trend line. It looks like that's exactly what it did. Daily chart breakout yesterday of the trend line and came back to test it. So that's a good sign for being bullish, you know. And that's it. The price broke out of the trend line on a strong green candle. The next day continues up over you're bullish. Coming down this way is, I can see why shorting is a good thing, but it's falling below the 20. Overall, the bigger picture is bearish, but in a shorter term, it definitely is. As day traders, we want to take advantage of, the shorter term trends. So let's see if this holds. I really hope this holds. I would like to get, at least a 4 or 5x return on this one. Be great. Okay, it didn't work. Another wave of anger, frustration, disappointment, and caution, and I need to pause. No doubt now I need to pause. Because it's going down, and this could be the sign that it's just simply time to short this thing. If I want to keep trading, use another account. Don't keep using these same accounts. I'm not trying to blow my accounts. I got a bunch of different accounts. Got around 20 accounts, and the objective would be to have a limit on each one of them and don't blow them. Try not to blow them, So anyway, that one didn't work. I got to figure out how to go short. Okay, copy pasting 2 accounts, and I am long 3 micros with a trend line break, multiple trend line break. Especially in the 10,000 tick chart, it looks good. This trend line break right here looks pretty good. And my stop's all the way at the bottom. So if it comes get me, it's worth a try. It's bouncing off the 200 moving average. It's coming close to these levels over here. Fair value gap, the top peaks. I mean, it could come down into it. You ever get out of a trade early and you knew you should have held it, wanted to hold it, but your emotions got the best of you? Well, that's something that we have to overcome. And I'm getting better. I'm not perfect at it. Like I waited for a 6R return. I had a 4R return and I didn't take it because I was wanting to wait, and it came down and break me even. But at least I broke even on it. Don't want to turn those into red days. Like right now, I'm perfectly fine since this is hit 1-to-1. I like my general rule to be I can take that stop and bring it all the way up to where right at break even. So let me do that now. Sometimes I regret it, but sell stop.
Order submitted.
Sometimes I regret it, but it's usually better if I just practice good. I don't want to turn a $300 thing into a $300 loss. Once I get over top of 1-to-1 return, it definitely, if I get over the top of it. Now this is a place that it can come crashing right back down, and in the area that it could come down to is right where my stop is, and that happens a lot. It happens a lot because it's programmed to do that. This thing knows where the breakout is, and it goes, a lot of times it goes right back to structure. We know this. We know. So it might not be a bad idea to pull it down a little bit. That's another idea I need to think about. Having a full stop loss is not a, you could cut some of your loss out. I could drag it up. I like that this is continuing to go though. I don't know what my largest win trade is, but this has got to be it so far. I would like to see it go up to that pivot up there and give me a two times. Now, I don't want to get greedy, and it's a fine balancing act to figure out, what you're going to do, how you're going to handle things. And I typically I know that I get out too early. I'm already on break even, and then I go back and think, hey, you were on break even. You didn't have any risk in this trade. Why didn't you just hold it as long as you can? And that's why I broke even the other day on a trade, because I had a 6 hour return or 4 hour return, and it came down and broke even because I was trying to train myself to understand that the big winners are only going to come if you keep holding it. That's it. And some of us need those big winners because we have so many losers. And the only way that strategy is going to work with a low win rate is you have to have the big winners. You just have to. So I don't know how. I'm going to try. It's possible I could just take this profit right here at this pivot level and be happy with that, you know? And it's also possible that it'll come all the way back down and I'll break even. It's also possible that it'll keep going. So those are the three things I'm contemplating. One, I'm already on break even. I have to keep remembering that. You know, I have to remember that I'm on break even. This is not going to turn red. This trade won't turn red. You know, I'm red for the day. You know, this might actually catch me up quite a bit, actually. If it keeps going, I could break even for the day, but at least on a couple of my copied accounts, I will be closer to passing the evals on them. I've got to at least take one off. I'll keep two, right? If it comes up to that target right there and gets me, I will take one off. That's something that you need. What's great about having more than one micro or one contract, it definitely can scale out. Let's see if it gets there first of all. Okay, it did get there. What's great about this is the best of both worlds. I had a risk-free trade that was on break-even down here, and now I've taken profits at two times risk, and I'm still holding the two that I have left. So I'm expanding my hold time, my patience on that. And I'm taking profits, and this is very exciting. This is kind of the first for me. I'm hoping I can continue to practice this, you know, more consistently. Okay, I realized this was copy pasted, and I'm up $500 on each account, and I closed the position. So I wish I didn't. But I did, but I'm still making progress. This is a huge thing for me, to using multiple micros, to copy pasting counts together, and to hold for at least 2R, and holding longer in general. So I'm happy, and I turned my red day into a green day, and I should stop trading. Probably won't. Okay, so here's what we got on the day here. I was down quite a bit. This was like $500. This is two. So it was a lot more than it is. So say $600 down, $1,000 up. I'm up $400 for the day. So that's better than being red. But these accounts are suffering. So if I'm supposed to pass all my accounts with $3,000 profit in each account for the 50K Apex accounts, I need 53,000. These are down now, and so this needs to be made back. And these two are up. I copy paste them together, got a better trade location, got a good trade, held it longer. So combining all these accounts together, in general, I am up for the day. I guess I'll keep adding to the video as long as I keep trading and need to report things that I want to reflect back on, and that is we took a profit on this trade right here because I'm just fully convinced now, after seeing that day chart, that this was a bounce. And I could be wrong, but I am persuaded, and that's the way I'm trading. So look at this huge move up off that bounce, you know. So I'm trying to remember where I took my trade, but I'm going back and looking at those 3 micros that I closed right here because of excitement of copy pasting 2 accounts, and I wasn't just thinking clearly. Look at this, man. I mean, we could be up $1,000 in each account. Wow. I'm just, and right now I took this, I sold up here at this white line because this is the previous day's high that it kept falling from, and I think I was long from right here. And my goal in my mind was, I hope it can get up there. So I just took it. If it keeps going, that I'm actually okay with that. And the reason why I'm making this part of the video is because I wanted to record the fact that I waited. And I'm happy with taking the profit right there. Even if it keeps going, that was rewarding to me. But these are the days that I want to make sure that I understand. They happen a lot. They happen quite often. Days that run, either short or long. And we want to hold in these kinds of days right here. We really, really, really do. And the only way is to just simply do it. And what I could have done over here, and now that I think about it, instead of just overreacting, I could have gotten out one more micro and just kept one. I didn't have to close everything down. Okay, so anyway, I'll see if I add more to this video, if I do any more trading or not.